Challenges, resilience, and volatility. These three words would describe the stock market in 2024. As we approach the new year, let's see how the Indian markets performed in 2024. First half of the year, the market showed strong growth with foreign investments pouring in. Also, the corporate earnings were steady, largely driven by increase in domestic consumption. Because of government investment in infrastructure and growth of the service sector, the markets were showing strong growth. This rosy picture started to fade in the next half of the year. The stock markets became highly volatile, all because of there is increase in inflation which hampered the domestic consumption. Then came the Q2 earnings results. This was pretty disappointing. There's further more correction in the stock market. And to add to that, geopolitical tensions were hard to miss. The final nail in the coffin was the FII out.
There are two sectors that performed really well despite all these challenges: technology and healthcare. These sectors remain strong performers, benefiting from innovation in healthcare and increase in demand for digital services. Do you know which sector reacted the most to the all geopolitical events? Energy sector. Energy prices fluctuated due to an imbalance in the global demand and supply and fears looming around the oil countries due to the war. Not just energy, overall household spending declined due to the rising food inflation, the impact on which was seen in all the sectors. Growth and momentum strategy has proven successfully, and we have captured all the opportunities, whether it's sector with strong earning growth or stocks that benefiting from valuation re-rating. Overall, we have applied a sector-specific approach, focusing mainly on textiles, broking, healthcare, and consumer products. This sector-specific approach not only allowed us to identify high-growth opportunities, but our small cases have been outperformed the market. But just a few days away from the new year, let me take you to 2025 outlook. So it cannot be denied that the Indian economy is currently experiencing a mid-cycle slowdown. Domestically, the earning growth has slowed down to single digits. And globally, there are trade tensions, especially with the returns of Trump and rupee hitting very low against the US dollar. All these factors have made the stock market very volatile right now.
So what should be your strategy as an investor? See, there could be a healthy correction in the stock market because of all this, which could bring an opportunity to enter fundamentally strong stocks at the right valuation. So the RBI measures to curb inflation will eventually improve the economic environment, which will in turn boost demand, and ultimately corporate earnings will get better. On the sectoral front, financial, consumption, and technology are expected to perform better in 2025 from a value creation perspective. So overall, this time may look tough now, but this could be a great opportunity to accumulate stocks in promising sectors. With our research and sector-specific approach, we want to make the right curated portfolios accessible and feasible for all retail investors. To ensure this, we have created portfolios on the platform SmallCase. The link is in the description. Let's make investing accessible and profitable.